Hello traders, welcome back to StrategyStack, where we dive deep into market analysis and trading strategies. If you haven't already, make sure to hit that subscribe button and ring the bell icon so you never miss an update. Today, we have some exciting developments on the Nifty 50. As we predicted earlier, the price action has continued to squeeze within a rising wedge pattern. This setup typically signals a potential breakout or breakdown, and we're seeing clear signs of this on the charts. As you can see here, the Nifty has been testing the upper resistance of the wedge, currently sitting around the 24,462 to 24,472 mark. A strong gap up opening above this level and continued buying pressure could push the index towards its all-time high. But be cautious. A breakdown below 24,200 could send Nifty plummeting by 400 to 500 points. Now, let's talk about the market sentiment. With a put-call ratio, PCR, of 0.79 for the August 14th expiry contract, the market is showing a bearish bias. Coupled with the double top pattern forming on the 15-minute chart, there's a strong indication of a potential downside. Notice the double top pattern on the 15-minute chart? It's a classic bearish signal, which, when combined with the rising wedge, gives us a clear narrative of the possible price action. If the price fails to hold above the wedge support, we could see a significant drop. In conclusion, traders should watch these key levels closely. If Nifty breaks above 24,475 with strong volume, it might be time to consider a long position. But if we see a breakdown below 24,200, brace yourselves for a sharp decline. Don't forget to subscribe to StrategyStack for more insights like these. Click the link in the description to join our community, where we share live updates and exclusive trading strategies. Remember, these are my personal market observations and not trading advice. Always do your own research and trade responsibly.